You know, if you run a nonprofit, you probably see the IRS Form 990 as, well, just another piece of paperwork, an annual chore you've got to check off the list. But what if I told you it's actually one of the most powerful strategic tools you have? Yeah, really. So let's dive in and unpack why this single document is so much more than just a tax form.
Okay, that sounds dramatic, I know. But the honest-to-goodness truth is, messing this form up can have consequences that are, well, catastrophic. We're not just talking about a penalty here or there. We're talking about the very existence of your organization. So what's the magic number that could bring it all to a screeching halt?
Just 3. That's it. Fail to file your required annual return for just 3 consecutive years, and the IRS can automatically, poof, pull the plug on your tax-exempt status. People in the nonprofit world call this the 3-year cliff, and it's a perfect name for it because it's this sudden, sharp drop-off that so many passionate, well-meaning organizations just don't see coming until they're already falling. So let's break down what this automatic revocation thing is all about.
Now, the key word you absolutely have to hear is automatic. This isn't some long, drawn-out battle with a bunch of warning letters. Nope. After that third missed filing, your 501c3 status can just vanish. That means no more tax-deductible donations, no more exemption from federal income tax. It is a truly devastating blow, and here's the kicker, it's completely avoidable.
So, how do you steer clear of that cliff? Well, it all starts with the absolute first step, knowing which version of the Form 990 you're even supposed to file. Because the IRS actually has a few different options, and which one you use is all decided by your finances.
Okay, so there are basically 3 tiers. For the smallest organizations, we're talking gross receipts of normally $50,000 or less, you can file the super simple 990N. It's literally an electronic postcard. Then there's the 990 Easy. This is for organizations with gross receipts under $200,000 and total assets under $500,000. If you go over either of those numbers, you're in the big leagues. You've got to file the full Form 990. But did you catch that word I used? Normally? What in the world does the IRS mean by that?
This is a super important detail, so listen up. The IRS is pretty smart about this. They don't want you jumping back and forth between forms just because you had one great year with a big grant or one really tough year. So they look at a 3-year rolling average of your gross receipts. It smooths out all those peaks and valleys and gives you a much more stable, predictable filing requirement year to year.
All right, so just staying compliant, that's the bare minimum. That's just staying in the game. But this is where it gets really interesting. Let's shift gears now because the Form 990 can actually be your secret weapon for fundraising. Seriously, you need to stop thinking of it as a tax form and start seeing it as your public-facing financial report card. Think about it. Before a program officer even finishes reading that beautiful grant proposal you spent weeks writing, guess what they're doing? They're pulling up your Form 990 online. It's the fastest way for them to get a snapshot of your financial health, your management chops, and your overall credibility. It's basically your organization's public resume. And one of the very first things they look for is your program spending ratio. Funders want to see that their money is going directly to your mission, right? Not just to keep the lights on. While there's no single magic number, a really healthy target to shoot for is having at least 75% of your total expenses going straight into your program services. When a funder sees a strong ratio like that, it immediately signals that you're efficient and you're laser-focused on the mission. But on the flip side, if they see really high administrative or fundraising costs, that can be a huge red flag that just completely torpedoes an otherwise fantastic proposal.
But wait, there's more. Your 990 isn't just about the dollars and cents. It also gives funders a critical peek behind the curtain at how your organization is run. See, the governance section is packed with these little yes or no questions that can absolutely make or break your chances of getting a grant.
These questions are basically a maturity test. They're asking, do you have a conflict of interest policy, a whistleblower policy? Is your board independent? Answering yes to these tells a funder that you're not just winging it. You have professional, responsible systems in place to run the organization the right way.
And here's the bottom line on this. Your programs could be changing the world. But a no on one of these key questions just screams poor management. It makes funders really nervous. And you want to know a common mistake? So many nonprofits actually have the policies in place, but they forget to check the yes box on the form. It's such an easy, avoidable error that can cost them thousands.
Okay, we've seen how this one form holds both a huge risk and a massive opportunity. So let's tie this all together. Let's build a simple, actionable plan to make sure you get this right every single year without all the stress.
Look, it really boils down to a simple routine. First, use that 3-year average to figure out which form is yours.
Easy. Second, know your deadline. It's always the 15th day of the 5th month after your fiscal year ends, and put it on every calendar you have. Third, gather up all your financial and governance documents way ahead of time. And finally, the golden rule: file electronically and file on time, every single time. It's the best and cheapest insurance policy your nonprofit can ever have. So if there is just one thing you take away from all this, please let it be this: stop thinking of the Form 990 as a burden. Start seeing it for what it really is, your single best opportunity each year to tell a powerful story of financial health, responsible leadership, and an unstoppable commitment to your mission.
And that brings me to the last question, the one I want to leave you with. When this is over, go pull up your last Form 990. Look at it with fresh eyes. Does it tell a story that makes you proud? Does it advocate for your work? Or does it kind of look like a rushed afterthought? Is your Form 990 telling the story you want funders to hear?